All right, we are now live. So, hello and welcome to those of you joining us just a few minutes early. My name is Charlotte. I do have James here with me in the Zoom room, and we're ready to begin his presentation on time at 9:30 a.m. That's Eastern Time, coming up in just a few short minutes. Thank you all so much for joining us today, and I hope you enjoy the show. Hello, everyone. Good morning. To those of you who are just joining us, welcome. We will be getting started on time in just a couple of short minutes here at 9:30 a.m. Eastern Time. Thank you all so much for your patience. Hello, everyone, and welcome to the session. It is my pleasure to introduce James Burren. He's the co founder and partner of CASA. He currently sits on the Canadian Investment Fund Standards Committee. James is called upon by membership and industry groups to speak on risk ratings and portfolio placement in all types of alternative investments. If you have questions for him today, please feel free to share those in the live chat box. It's located on the right hand side of the video player. Time permitting, we'll see if we can get to those at the end of the session. And with that said, James, I will hand the mic over to you. I'll be here if you need me, but the floor is all yours.
Right on. Thanks, Charlotte. So yeah, like you said, it's James Burron, founding partner of CASA, Canadian Association of Alternative Strategies and Assets. So we just say CASA. It's a lot easier. And we're based in Toronto, represent the alternatives industry across Canada and globally. So I'm often on the road speaking with pension plans, family offices, asset managers across Canada and also in the US, Europe, and right now in Asia, actually. So it's an interesting role. We see a lot of things, and today we're going to be talking about these prognostications that Wall Street and Bay Street did back in December, thinking about 2026. Everybody has great ideas about what might be happening in the next year. So we're going to see some hits, we're going to see some misses, and we're going to have some interesting insights along the way. So let's get into it. Let's see if I can get my slides. There we go. Oh, yeah. So Abby Cohen, I remember this because I was in the market. Actually, I started like 95. So in '07, in December, Abby Cohen, the chief strategist with Goldman Sachs, venerated firm, of course, said, it's going to be just like 2008 is going to be just like '07, up 14.5%. Didn't happen, down 38. And a lot of stuff was down a lot more over that credit crisis time. A lot of funds were down, or a lot of funds and long only indices were down about 50%. And but 40 was generally where it was. And then we had, hedge funds were down like 20%. The hedged funds, the ones that really you thought couldn't go down, everything was correlated and had trouble, except for one, commodity trading advisors. But no one called that. Some people that ran those strategies came out brilliantly, but we're going to go through some of the predictions that they had in the early or late 2025 and show you where they went. So we're going to talk about where Wall Street thought the Dow would, or the S&P would be. We don't really use the Dow very much. If anyone called the Iran war, I don't think anyone did. Then of course, there's rates. We're talking about the Fed here, oil, gold, Bitcoin, which has been more and more of a big deal. We'll take a look at the predictions versus the tape. And then Canada, we looked at the big banks and dealers such as Raymond James Canada and Richardson and such, and talked about where the TSX S&P might be, Bank of Canada, and of course our beloved Loonie. And then we have we have all of that, and then we'll tell a bit more about what this might mean for the back half of 2026. I mean, personally, I think the best prediction is last period's print. So if everything's up 10%, whatever, let's just do 10%. It statistically, I think it works pretty well, but everybody has ideas of where things might be. I am a little bit focused on interest rates myself because I have a mortgage coming up a little bit. So I mean, every Canadian I think plays that game. So, anyways, we'll get into it. So here's where the targets were. I mean, we had folks all over the map here. Maybe nobody really had the exact number on there, but 2025 we had the big banks. They put it 16 of them are on this chart here. Big range. Ned Davis said 7,100 at the low end, Oppenheimer 8,100 at the high end, the average 7,580, and that's about where we are right now, which is a kind of interesting. So there we are. We're where they thought we'd be at the end of the year, but the ride was nothing like that. We had nothing like that nice return of 10%. So what were they basing this on? AI. AI was a thing last year, obviously. It was a big deal. And the CapEx boom, the hyperscalers, everything was going AI, going into data centers. It still is. I was at an infrastructure conference in Seoul last week, and they're still talking about hyperscalers and data centers. And that's where everything's going. Even I'm using AI. So that was supposed to drive the growth. We were supposed to have a lot of earnings growth, 12%, and then reflected by a 10% growth in the stocks. So I guess a little bit of margin compression. And they thought the Fed would start to cut rates, seeing growth out of the U.S. economy, especially, and maybe around the world as well. Everything seemed to be kind of ticking along in December. We didn't have a COVID on the horizon. Of course, no one called that. So people thought that there would be a couple of rate cuts, at least one, and the market. So the Fed funds rates, the implied by the futures, said it was going to go down by one. So there's a lot going on there. And then tariffs. Tariffs were a big deal a year ago. I remember I was in Europe when it was going on, and everyone was talking about it, and people were wondering what's going to happen. But yeah, it that was starting to go away. So everything was looking fairly rosy. So now what happened? My God, no one got the Iran. Maybe there's a few folks out there that do a lot of political predictions and prognostications. Somebody probably had it out there. I mean, they're talking about a war in Taiwan as well, or maybe Korean Peninsula will open up again. Who knows? But those are the things where it's like, okay, it's a cheap bet. You can put it on the you can put it on your newsletter and say, what if this happens? And you come out like a Nostradamus. But no one really modeled this sort of, like it says here, like kinetic U.S. Israeli strike on it and killing the leadership, not only the first level, but apparently the second level of leadership, and now they're on the third string or whatever you might want to call it. So that was not in the cards, and this has been kind of apparently in the works for decades, and just really it didn't happen until February 28th. Of course, oil spiked up. You know, Brent was at $60. It popped up like, yeah, spiked above $100. I remember when oil was negative, when things were going on, crazy things going on in the futures market. So no one really saw that. Again, some people probably did out there, but none of the big shops that kind of stake their reputation on making these types of predictions. Of course, Hormuz is closed. Apparently, it was going to be open quite a few times. I think it was open for a little bit. I think it might be closed now. Who knows? There's not a lot going through there. It's 20% of crude, 35% of energy. It's a huge amount. All liquefied natural gas coming out of Qatar comes through there, and they're a huge supplier of LNG to the world. So we have a lot that wasn't in there. And then the Fed cuts. It didn't happen. It still might happen. So let's get into it. I really hope that something like that does happen for mortgage rates. We're a little bit different in Canada, though. So how's it going? So here's the track. Here's the current level, 74, 73, very close to what actually it's a little. Yeah, I think that was May 22nd, so it's pretty close. But it went through all kinds of ups and downs. Of course, there's the end of February there, just dropped, and then rallied right back. Almost no one saw that. Um, we have a whole bunch of things like with here's JP Morgan. Here's the things that people don't really talk about a lot. They're revisions. So December they say Goldman Sachs was the only one with the same number, but everybody else revised downwards. Oh, okay, March, April, for after the first quarter numbers, it's not looking as hot. So we're gonna take that out. We're gonna take it down a notch. This is based at 6,800. So take like this is the way you can lie with your statistics. So we base it at 6,800, so it looks like a huge move. It's only 300 points or 150 points or so. So it's not huge differences. But when you're looking at that from where we'd started, that's a big move for any investor. They were looking at 10%, and now they're looking at like 5% for the year. And lo and behold, like I say, it ended up hitting the average anyways. So the Israelis, U.S. Israeli 900 strikes. It was unprecedented. Every team seems like every time we have a conflict, it's more than whatever happened in the previous one. So the S&P was immediately down, crude spiked up, and then you had the oil shock. So I think it's about 180 million barrels a day now. So 10 million is huge. I mean, that's the size of a small country or even a larger one that simply didn't make it out of the region. Thankfully, there are reserves. People, of course, the strategic oil reserve in the U.S. and other companies or other countries and the companies as well have reserves. They're not working strictly on just in time. We've learned from COVID that you can't really do that all the time. It can be just in time all the time because there will be shocks like this, and you never know where they're going to happen because this is literally a black swan. Which, if people follow Nassim Taleb, his books "Fooled by Randomness" and well, Black Swan. Someone asked him, "What's the next black swan? What's the next black swan?" People always ask him that, and he just said, by definition, I cannot tell you what the next black swan is. It's a black swan because we don't see it coming. And that reference actually comes from swans, which are typically white. In Australia, they're black. They have black ones. So no one had ever seen it until they did. So people went down to Australia and saw these black swans. So that's where that comes from, that idea of black swan. Also a ballet movie. But so these kinds of things they happen all the time. And if it's not one thing, it's another. Something will drop, and then we'll have to deal with the aftermath. Like I say, crude was negative dollars, like minus $1 a barrel or something like that a few years ago. And that was due to imbalances in the futures markets and supply, and having a bunch on tankers. Maybe there's too much supply, too much in the system, too much channel stuffing. So sorry, get to the next slide. Here we go. So here's Brent. So the World Bank thought $60. You know, um, no one real like JP Morgan, yeah, okay, 65, a little bit higher. And then 112 was the peak. So we had inflation. And then oddly enough, well, we'll get into a bit into the Fed here too. But when inflation spikes, typically you saw this with Paul Volcker back in the 70s, they just raise rates to choke off inflation. There's a few different types of inflation. There's demand pull and supply push. So you can have prices going up from an externality like this. Doesn't necessarily mean it's permanent inflation. They call it transitory. Of course, they called it transitory earlier with COVID, and it was permanent because there was so much money being printed. The U.S. printed $6 trillion over COVID on a 20-odd trillion-dollar economy. You're going to have inflation. Inflation is a monetary phenomenon. So, this one's different though, truly, because it was due to the war and Brent just spiking up, and that probably won't happen again. But it's still that bottleneck in the Strait of Hormuz, and there's no real getting around it unless they're actually laying pipe through Dubai to get to the other side of the strait, but I'm not sure if that's done yet. So they're working on a kind of a hardware solution, but it's not 100% there. So here's the cuts. The market said there'd be two cuts back in the December last year, about 5 months ago. The Fed, so the dot plot is basically what's implied by the futures. It said one cut and zero. Now, these folks may be right because it may happen at some point, but we've got some time to go here. But a Fed cut basically means that the economy is in trouble, and we have had pretty higher unemployment. So if that continues, then they could realistically cut. The other thing is a change in the Fed governor, which is appointed by Trump. He really wants to have low rates, so maybe that'll mean fewer cuts. Fewer raising rates, or maybe no raise of rates when typically that might occur, or having a cut. So going forward, I would say the leaning is on cuts, but really, who knows? Gold, actually, this one was pretty good. But I think the World Gold Council, they said it would be up 25 to 30%, and it did go up to like 5,600. And I remember the day when someone wanted to price a derivative that gold would hit $1,000 in about a year, and we thought that was insane because it was something like 600. And now here we are at 5,000 or so. Or 4,000 or so. These things do happen, but the World Gold Council, they're the super gold cheerleader, so of course they're going to have a high number. But UBS, based in Switzerland, maybe they know gold. You have Goldman was on the low end. So you did have that spike, and that spike was but really because when the war started, you had a lot of people buy gold and flight to relative safety in the U.S. dollar. Even though the U.S. dollar is not AAA, it's still the reserve currency for now. That may change. That occurred back in 1946, Jekyll Island. Everybody decided that the U.S. would be the reserve currency because it came out of World War II basically intact. It had all of its factories and everything. That's what allowed them to beat the Nazis. They weren't bombed on their own soil. So you had the U.S. was just a tremendous economy, and then the Marshall Plan. So basically, once they became the world reserve currency, it was not, though, however, part of Nixon's deal with Saudi Arabia, apparently, where they after the oil shock, Nixon came in and I forget the name of it. He had an agreement with them that wasn't for oil to be priced in US dollars. It was merely to have a lower price of oil. But oil's priced in US dollars. There's some people buy and sell it in rubles and rupees in Chinese renminbi or yuan and renminbi. So there are other currencies, and that's growing. But gold is the other reserve that everybody jumps to when things are having trouble. So if you think to yourself, if bombs are falling, you want to grab your gold and run. Bank transfers won't do it. And the other thing is this digital gold. So cryptocurrencies, especially we're talking about Bitcoin specifically, the original, the OG. Although technically it's not the original, it came out in 2008, and with the Satoshi white paper. And there have been similar ones, but not as sophisticated. It's back in 1995, I think 92. So that's had tremendous growth over the last few years. Uh, it's right now, but it's actually just under 70,000. So it's actually come down from this number that I posted in May. But it's everybody thought maybe it'll hit 75. That was a bear, and then the bull was in 25, and from the high. So they basically thought it was going to double from the high in October 2025. The thing about this and almost everything is that you never really know where these things are headed. So having a diversified portfolio, or having, even within the cryptocurrency or Bitcoin market, having a manager or fund that invests in these things that can go long and short, find arbitrage opportunities, apply leverage where needed, where appropriate. Is that those types of things, rather than just putting everything on, double zero on the roulette table. Yeah, I mean, you'll get paid out 30 odd to one, but the odds are against you. And what if you don't get it? You're gonna be toasted. So the people think money didn't move to the digital gold, to Bitcoin during the Hormuz and Iranian war crisis, but that may change next time. It may be an entirely different situation. So let's look up in Canada here. The TSX, so this is on a CAD basis compared to US basis. We actually did better than the S&P. Rebasing it in either Canadian or US for both of them, we were a little bit behind. So, those numbers are pretty good. Of course, we had gold, so we have materials and a lot of things. 13% of the TSX, that's huge. The banks did really well. God, 32%, and then kept going in 2026. And then with the oil spike, get energy, which is a big deal for Canada. We still have some, the trade agreement, the old NAFTA agreements being I think it's July 1st. We have to make the decision. We won't. We're going to have more negotiations, so that will change things. I don't think it'll be ripped up. That would be absolutely ridiculous. We have the Auto Pact and all these things that allow us to continue to work tariff free with the U.S. So it actually can't. Canadian exports to the U.S. Well, 95% of them are tariff free. So the idea of having 50% tariffs or whatever it might be is interesting, but it's not realistic. So but those kind of worries can affect the markets. But year to date, 9% or so. S&P about the same in US dollar terms. So if you just looked at your statements in the US and Canada didn't convert the currencies, pretty similar. Let's see what we have. Oh yeah, the rate hikes. Yeah, here we go. So here's the thing I'm thinking about. So folks thought, just like in the States, they thought there'd be a couple of hikes from a 2.25 to 3/4. So that didn't happen. Like I say though, Scotiabank and National Bank might be right. Of the six banks, they still have 7 months to be correct. So we'll see where that comes from or what happens there. Okay, the loonie, yeah. So it was actually pretty close. So RBC thought their year end was a buck 35 and 138. I call that a hit. Like you don't have to be perfectly on. And that was a spot a little while ago. So, we had, oddly enough, you'd think that we would be doing well because people would be buying a lot of oil and such and moving flows into Canada. But whatever. You never really know what's going to happen with those markets because there's the trade flows, but there's also sentiment and there's futures. There's a lot going on that if you have an idea of where, if you get two or three things right, you can still be wrong just because of two or three other factors that you either didn't account for, didn't account for well enough, or didn't even know about. Um, and CPI, yeah, pretty much the same as we expected, 2%. That's always been the number that the Bank of Canada has been going for. I don't think they have official guidance for the last few years, but that's a number that still sticks in people's heads. When I was going to school in the mid 90s, that had just started to occur with the bank governors in Canada. So, of which Mark Carney was one of them. So that's a long line. So GDP though, no. I mean, we were supposed to do 1.4%, which seems really low, especially if you're in Asia like I am. But in Canada, that's not bad on a multi-trillion-dollar economy or a couple trillion. But actually, about 1%. So we're tracking low. Things can still change, of course, but we'll see. Unemployment in Canada, 6.7%. How much of that is structural is debatable, but that's it can be a drag because if people can't pay their mortgages and such and all these other things, then your growth is going to be subdued, even with low interest rates. So we're going to look at the Bay Streets. We're going to look at them from kind of compare them to one another. There's quite a few. There's the banks. We had Wellington Altus, Raymond James Limited, which is Raymond James Canada, and Richardson Wealth, which is now part of Industrial Alliance or IA Wealth. But we have here's the folks who are making the calls and where we have them available. Yeah, so Doug Porter, he's been around forever, and then Jim Thorne as well, and he loves AI. God, he's a nut for it in a good way. And then so the call, yeah, he loved the AI. RBC saw the banks at fully valued, but they ended up going up and so RBC, look at the third line, they ended up beating estimates. Where else? Oh yeah, the TD Securities was looking at insurers over the banks. No, the banks killed the insurance, but they did better, way better than insurance, up 32% last year, and then still doing well this year. Yeah, so it's kind of all over the place. You really can't make a call one way or the other, I think, for these predictions. Uh, Here we go. And then who picked the gold rally? Almost everybody. So fantastic. Way to go, guys. Hit. The S&P, pretty good. I mean, they guessed 75.80. They got 74.73. To me, that's exactly the same number. Bang. So, but that's the 1 year rate. So, and they've already achieved that now. So if you were to sell everything and wait at the end of the year, take your cash, then you made 8.5%. Fantastic. If that's what you want to make, you're done. But there's a lot of stuff that can happen for the next 7 months. Earnings, yeah, strong earnings in the US that occurred. Earnings was earning EPS growth of 28%, beating expectations in about what would that be, 5 out of 6 times. Fed cuts, no, didn't happen. Oil, no one saw that. Bitcoin being where it is, no one really had that. The war, no one had that. And the Magnificent Seven, yeah, I mean, it's there, but NVIDIA is not really moving. So the breadth of it is widened. It's instead of them all moving up in tandem or together, you pick one, you pick instead of picking them all, you pick one. Right now, if you picked NVIDIA, you did make a heck of a lot of money compared to the other Magnificent Seven, the other big tech stocks. So, and so what doing things like this is interesting. I do, most people do it at the end of the year, or right in the middle. So, but June 2nd sounds pretty good. You can see a lot of things and still have time to renew your thesis or revise it or try to think of new ideas. I mean, that's what good traders and strategists do. They're always thinking of the next thing. So this is the way you say the S&P is up. Maybe there's there's probably more to do here. But why did it go up? Um, what is there something else? What's the next black swan? Of course, by definition, you can't tell what it is, but maybe there's a way to figure this out. And yeah, Macroforce, I love this like half-life of 90 days. Thank God for AI for coming up with that. But it doesn't take long for you to be wrong. And if you want to be right for the entire year, it's going to be really tough because a half-life basically means it's cut in half and a quarter. So you got a half, a quarter, an eighth, a 16th. So you're almost no chance of being correct by the end of the year. Although, by then it might have gone up or down to whatever you needed. So the thing is, you need to have alternatives. You need to have, if you have gold, you have energy stocks, you have these real assets like real estate, and also, like I mentioned, managed futures, or I might have mentioned earlier. So managed futures are buying and selling, like typically currencies and interest rates, because that's where the volume is. You can do a lot of trades without affecting the market, but they're also trading wheat and literally pork bellies and frozen concentrated orange juice, just like in trading places. So those kinds of strategies, as a hedge fund strategy, can do very well during a downturn because they're uncorrelated to everything. So looking at these other alternatives, if you have stocks and bonds, they're going to be stocks and bonds to each other are going to be very correlated, 90%, so something like that, or in the mutual funds too, they're basically indexing. Even stocks and bonds have been correlated together over the last while because things have occurred like these shocks where they didn't raise rates, or they have raised rates. This time they didn't, but so a lot of other stuff is well correlated, but alternatives generally are not. And you got to have earnings though. So let me see. I have 3 minutes. I don't know if there's any questions. I don't think I see any in the chat here yet, but we'll talk. So yeah, geez, what's going to happen with the Hormuz? Who the heck knows? Like every time we're very close to a deal, we'll see. And then we have the Fed will be meeting again just after this. No, it seems like a long time off, but we'll see what happens with as the unemployment continues to be high. AI and all the capex that's occurring. Some people say that there's no way they can make money. There's a lot of uh, round turn trades, like someone invests in somebody else and somebody else and somebody else, and they all buy each other's products. Like so, at the end of the day, where's the money coming from? It all seems to be a check that's kind of kited around. So who knows? And then you have these elections. Good God, earnings. Oh boy, kind of depressed myself here. Anyways, there's a lot going on. And I think we're getting there. Yeah. Okay. So main thing is always a good starting point to take a look at what the consensus says. You can kind of figure out what's on people's minds, and importantly, find out what's not on their minds. No one talked about Iran. No one talked about like now. No one's talking. Maybe some people are talking about Taiwan because I already did. But you know, 2026. It's not 2008. I hope, because that would mean that in a few months in September, we have basically the destruction of the financial system globally. So we'll see how we do there. But if people have any questions on our website, which is a caasa.ca, oh, it's in the bottom left there, the back end of my email. We have a lot of publications that people can use, and I'm up at 1 minute. Charlotte, how are we doing there? Are we good?
We are good. No, I do have one question for you if you want to
Oh,
just
great.
go ahead and answer this
Yeah.
one before we log off. One of our viewers, he goes by Go Bananas. He says, with AI
Oh,
blowing through their annual budget in a matter of months,
yeah.
is AI having money math issues?
You know what? I've been looking at this. Like I started doing it, and it's cheap. Shit, even the max on Claude is $100, and the Pro is 24. Like, who wouldn't sign up for that stuff? But they are using a lot of these tokens, and it's costing them a lot of money. So maybe this will get a lot more expensive. So I think if you can use it now, then use it because it seems to be cheap. Um, Maybe this will look like it's expensive, but anyways, it's a brand new industry. People are trying to figure stuff out. We had this with railroads. They had railroads that went to nowhere. They had different gauge. It didn't work. A lot of money was wasted. A lot of money was wasted with the internet when it came out. A lot of money was wasted in a lot of places. So Some of these data centers may or may not work. The big thing is power. It's that, and that's bar none. That's where the money needs to be, or that's the focus. So I guess there's no real way to know if it's going to keep working. But yeah, personally, I'm just using as much as possible now, because if it starts to rise, just like Ethereum did when it was $10, it was great. Now it's like a few $1,000s. So if you have to burn Ethereum, it's going to cost you a lot of money. So I would use it now while you still can.
All right. Well, James, thank you so much for a fantastic presentation. Glad we could squeeze at least one of those audience questions in there as well.
Love
It's
it.
been a
Thanks.
pleasure having you on today.
Excellent. Thank you. See you guys again soon.
Absolutely. And to those watching us live, be sure to stay tuned. We do have a lot more in store for you in this Money Show Virtual Expo. Of course, I hope you have a wonderful rest of your day. Take care.
Thanks.